Hello everyone, and welcome to FinWiser Advisory. In this course, we are talking about financial modeling, DCF and comparable valuation. This course is divided into 16 modules. We are building a financial model on Tesla Motors. In Module 7, we will cover Capex account. In this module, we will understand what is Capex and depreciation, extracting the historical data from annual reports, creating placeholders for forecast period, calculating values in the forecast period. We will be using Microsoft Excel. In this template, there are two sheets named as Control Accounts 1 and Control Accounts 2, which step-by-step runs the user on how to build Capex and depreciation account. Historical income statement, balance sheet, and cash flow created in the previous modules are available in this as well. Once the user completes a module, the final outcome of that is available to be used in the next module. Now, let's get started. What is capital expenditure? Capital expenditure, or Capex, is the money spent by an organization on buying, renovating, and maintaining tangible things like property, industrial buildings, or equipment. Capex is used by a company to initiate new projects or investments. The following expenses may be incurred in this regard. 1. Buying fixed assets. This would be new property, buildings, machinery, or equipment. 2. Updating current assets, extending the remaining lives of current facilities and infrastructures via renovation or upgrading. 3. Development projects, investing in new projects like constructing a new factory or office space. 4. Technology investments. They involve purchasing technology solutions and software that will be in use over many years. Capex is vital because it caters for long-term investments aimed at improving the company's productivity and efficiency levels. Unlike operating expenses (OPEX), which concern daily costs related to running a business, Capex has effects beyond the immediate fiscal timeframe. Instead of being regarded as an expense under income statement, it is treated as an asset on balance sheet. The impact of Capex on the financial statements, as well as cash flow position of the firm, can be quite significant given that it uses a lot of cash resources for the company to focus on other activities. What is depreciation? Depreciation is an accounting method used to allocate the cost of a tangible fixed asset over its useful life. It represents how much of the asset's value has been used up over time and helps companies account for the reduction in value of their assets. Depreciation is recorded as an expense on the income statement, reducing the company's taxable income. All the supporting accounts for historical period are created as opening balance equivalent to previous year closing balance, additions from cash flows, depreciation from cash flows, closing balance sourced from balance sheet for historical years. Please note, at the time of financial statement integration, the forecasted line items in these accounts will flow to the similar line item in the financial statements from which the historical are sourced. Let's set up the historical period, that is 2011 and 2012 account for capital expenditure. 1. Opening balance row 41 is assumed equal to the previous period closing balance as done for year 2012 in cell E41. Since we don't have the 2010 year in the model, we can hardcore the 2011 opening balance in cell 41 from the annual statement. 2. Additions row 42. This line items refers to Capex incurred during the year and is sourced from cash from investing section of the cash flow statement. In this case, Capex is available on the statement of cash flow sheet row 31 and can be linked as shown here. 3. Disposal row 43 indicates amount of assets disposed during the period. In this case, since we don't have any details around disposals, hence, the same is assumed as nil. 4. Depreciation row 44. This line items refers to depreciation charged during the year and are sourced from cash from operations section of the cash flow statement. In this case, depreciation is available on the statement of cash flow sheet row 9 and can be linked as shown here. We need to calculate the historical depreciation rate in row 48. Refer to formula used in cell E48. 5. Others, row 45, represent the adjustments to match the transactions with the reported closing balance and is calculated only during historical period. 6. Closing balance, row 46. Closing balance during historical period of fixed asset or property, plant, and equipment can be linked from balance sheet row 16. For the forecast period, that is 2014 to 2018, we need to input relevant assumption like 1. Capex to be incurred from 2014 to 2018 row 42. 2. Disposal in row 43 and others in row 45 can be filled as 0 because we are not forecasting these line items. 3. Depreciation rate for 2014 to 2018 in row 48. 4. Depreciation charged for the year in row 44 during 2014 to 2018 is calculated based on the average book value of PP&E and the depreciate rate for forecast period using the following formula in year 2014 and expended to other years. For rest all line items, extend the formulas used in historical period. That's all for now. See you in the next module. Have a wonderful day.